None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It is Tuesday morning, time for Process Warriors. Quick announcement, there's not going to be a Process Warriors on Thursday. Looks like all the other shows should be in place that we normally do, just there will not be one of these shows on Thursday. Bob's fault, not Mitch's. I'd like to blame him, and you know how I like to do that, but it's not going to work, right, Mitch?
That's right.
Okay, so a switch in what we're going to be doing on this show, at least for today and for this week then, is really starting to talk about actual individual processes and how to use VPM on a more intricate scale, away from just building portfolios, actually understanding selection process and stocks and how research works and how to just use the software in general. So Mitch, what are some of the other things that we're featuring today that as far as what's in the PowerPoint and stuff like that? I saw some of it.
Some of the things that I thought would be good to cover today is more the nitty gritty. You know, what's in the system? What can you get out of the system to know? More information about the security that you're looking into, even if it works well with our system. I know there's a wealth of information in the system. That's pretty much what led to things like the investment exposure charts. It's data that's in the system. It's just either hasn't been known that it's in the system, or people just didn't know where to access it. So I thought this would be a great opportunity now that we've gone through the basics of building out portfolios, talking about how to deploy them, a lot of that stuff, to then revisit some of the nitty gritty stuff about actually, how to tell if a security, to just view the entire history of a security and then see, does this actually work with the system? So I thought it'd be good to have some dialogue about what the system does, what information is available to you, and then actually start talking about, well, how to do the analysis to determine if the security will work well for you.
Let's face it, VPM's like any other software. If I'm sure I use like 1% of what Word can do even. A lot of folks just get used to finding certain things. They don't really research or understand what's there, and that's what we're hoping to bring into this. I am going to just change over a couple screens here while we're getting ready to go here, and we'll get over to our PowerPoint, and we will go switch over to that level and just take a look and see what we've got going here. So
all right,
I'll go ahead and get this thing started. So research, big element here. We have 18,000, I think last night this number stuck in my head for some reason, 18,343 symbols were updated yesterday. And that's a lot of symbols. And to try to figure out where all these things are, and it's a combination of things like Mitch was talking about, what we're going to go through today, the trade impact charts, looking at the transparency, looking at the funds that we chose and the different elements within the sectors and the groups and on and on. So it's pretty detailed. I would say, I don't know, a large percentage of you folks out there are even unaware or do not understand, or therefore that causes some misuse and misinterpretation, I think, of the system and what it's doing. And yeah, 18,300 and whatever I said, now I forgot it. I remembered
364, I just pulled it up, yeah.
There you go. All of those symbols, does it work perfectly in every symbol? Absolutely not. But that's what the ER ratio is. I'm sure we'll go through all that stuff here shortly.
Yep.
Just moving on. So I think what we'll probably end up doing, there's a couple elements we're going to try to bring in today the best we can. Is just going through, going back and forth between the PowerPoint and 2.0, and then ultimately we'll even delve a little bit into Portfolio Expert a little bit to show you some of the screens there, some where you might find some of these elements there. So, big. I designed this back in 2000. Actually, what we had before 2000 was what was a fat client. It was basically like an Excel spreadsheet is all we could generate. We really couldn't see research very well. We had some screens we could bring up some stocks, but that was my big effort, was how to bring some transparency, how to be able to get a tree so we could look at everything from sectors to groups down and drilling down into the stocks, or even if you wanted to go the other way, find the stocks and go back up the tree. And that tree is always moving, so you might on occasion find some components that are mismatched, but we're trying to we go through and do maintenance on that all the time, so there's some magical movement that happens there when we don't know. Yeah, Mitch, you're really big on this screen.
Yeah, I look like a giant.
Mitch, Andre the giant here, we'll fix that when we get going here. But the bottom line is, when I was doing this, it was really trying to figure out what symbol should I put in there. We've seen all kinds of things happen over the years where advisors, 100 is the minimum ER ratio that we'll talk about. But first of all, we'll stay with the tree and how that was developed and how to go through that. Actually, I think we probably should just flop over to 2.0 and just go through that at this point.
Yeah.
Unless you have a better suggestion.
No, let's do that.
All right.
Pull up 2.0.
All right. I'm gonna get your big head off of here. It's scaring me. So anyway, folks, let's go over to. We've got 2.0 loaded up here, and I'm going to do my best here to get. We'll get over to research area. And the very first screen that pops out here, matter of fact, I'm going to just take me off the screen altogether so we can see everything. There's several things here that just pop out right away. Is you always have this current position of the VPM universe, and you can see all the buys and sells. This chart over here is a composite of all of these 12 sectors, 102 groups and 18,364 symbols. So this represents all of those symbols in there, what the average price is of this. So this is an average price indicator. And what I wanted years ago was just to have a general view of what all the data was supposed to was indicating it was going to be done, as far as a trend. So we've got this big monster trend that we've seen, and this was on the average price of every stock in the database. And this is pretty impactful. There's one thing you can do here, which that you can really go through and see all of the data. And one of the, I don't know that anyone's ever seen this. Maybe Mitch doesn't even know. He's off screen right now. But if you go into a quote here, and it's I guess it's what carat VPM, and you bring this up here, it's going to show you. Nice.
Oh, it's underscore carat.
Yeah. What do I know? Let's see here. Underscore. Carrot.
A lot of these advisors probably didn't even know these keys were on their keyboard.
That's pretty mean. He didn't mean to be that rude. He's normally a pretty nice guy. So, but here on this symbol here, so it shows, this goes back to 1995, this universe chart. But what I can do is I can actually graph the data here. And I'm bringing up the entire graph of all of the data. Brings in a really, really interesting perspective. And is this showing all of the data over here? I guess it is, yeah.
It is. It's such a large time scale.
Yeah, so here's what's happening here. Look at this. So everybody's talking about new highs. Do I see new highs on the VPM index? I don't think so. The last new high was 2000. So it's interesting perspective when you look at how this thing, actually 07, I'm wrong. So, but this was the last high. We're not even close to that high. And I believe if you did, Mitch, you did one of these a while back. It was a, let me bring his, let me fix Mitch so he doesn't scare us real quick here. He is on, I don't know how that happened as far as the, how that happened with the whole deal with him being that big, but let's see if we can get him a little smaller. Oh, he's really small. That might be a... Excuse me one second, folks. This will just make this easier to watch, I think. So, yeah, so here we go. So he's much better size there. But the bottom line is the average... I don't know why I haven't looked at this chart for a while. But this is actually showing that we're not making new highs on the average price of everything in the system. Now there is some rotation goes on, that symbols are dropped and added and all that, but generally speaking, all of these symbols that we can are looking back when this index is generated. So everything is representative of what's going on in the system. So this is somewhat of an interesting perspective, and maybe this is the big divergence for the end of this rally to occur. But anyway, you can go through and look at any symbol in here, by the way. So we can put in IBM just so you know, and this goes back to January of 1980, and we can graph that entire data there. You can see what that looks like as well. So you can see all the data. You can actually bring up the tablature data. You can view the actual data, which will show you day by day all the way back to 1980. So you can see complete transparency in the database. I wonder how many of you out there in the field have actually ever clicked on this or seen this. But this can be, you can actually save this data as well. And so if you're ever looking for a price point sometime in the past, you can always go back here, and our data is all split adjusted data. So that's good to know too. So, but this universe chart, the whole plan when I was building this was to have this transparency and to be able to see exactly what's going on with the data. So then we broke it down. We still use the Thomson Reuters breakdown, which has 12 sectors. S&P has 10, and I think 58 sectors or groups. I forget the exact number right now, but we're 12 and 102, and then the symbols break down accordingly. You can see we're at 58.9% long. We're 58% on the sectors right now, and we're 48% on the groups. So you can actually break down through this. You can see down below, this is all of the sectors, but off on the left here, you can see which ones are flat, which ones have open positions, and then you can see the actual P&L on these. And one of the things I usually use a lot is I'll hit the I'm going to get, now that I got Mitch all downsized after all that pain, I'm going to get us off the screen here. But all of this data here has shows exactly what the P&L is, how long it is, and this I guess there's just a lot here, isn't there? What does type mean? Maybe we should go through these. So type is accumulate, hold, and then there's underperform. I never came up with a better answer for that, but accumulate means it's below its average holding period. Hold means that it's met its average and it's in between the maximum, and when it hits the maximum, it will actually go to underperform. We don't have any examples of that at the moment. But all that's telling you is how long it is in the tooth. I'd actually rather have that as a percentage or something like we do in the VPM stats, Mitch. That's something we should look at. Maybe we can change that field, and that might be something that could be easily done in VPM 2.0. I don't know. But anyway, but the whole point of all this was you can notice that the energy sector has been on since January 1st, 2013. So what's that? A year and a half, just about, up 24%, 363 trading days. The average holding is 232, so that has about a 1-year average holding period, and the maximum's been 531. So that we're in hold because of, if we go into the T button here, this will show us what the trade profile is on this particular stock. If I can grab this, well, let me grab the handle here. There we go. You can take a look at this and just see it's 363. Here it is, 531. We're 139 days under the longest holding period. So all the stats are broken down here, and then you can see the mean is at 232. So when we go over that mean, we're in a hold, and it will not go to underperforming for another 139 days. So it'll stay in a hold until it gets to that. And underperform just means it's likely not to have a lot left, although historical highs and historical holding periods are part of the process, and history continues to be remade, I guess, at different levels. So there's just a ton of information that flows through the symbols when you're looking at this stuff. You've got all the breakdown that's here on the percentages. You see the VPM position here. Whatever you pull up here, whether we brought up a sector or whatever, it would show you what the average days. So it says 6 market days. The average holding is 212 market days, and this is what the position is. If we went into the trade profile in the VPM universe, it would actually give us the date, the forward-looking date where that holding period is expected to go. So go back to, let me get back to the main page here. So if this little legend at the top, the double flat arrows are double arrows that are going flat, says there's no position. If there's a new exit, you're going to show the downward arrow, a new buy, upward arrow, and the OP stands for open position. And that's going to be seen on every symbol in there. You have any other things you want to add here, Mitch, while I'm going through this?
When you say new buy or new sell, what is the time frame on that?
That's for this week only. So what will happen is you'll get let's say on Monday it shows a new buy or a sell. That symbol is going to stay on for the entire week, because this is a weekly, end of day weekly or end of week viewpoint of what it is. So if it shows a new buy, it's going to show the position that buy arrow next to it, but it will actually be tracking the P&L every day as it's going. And if it's an exit, it will actually exit on Monday's opening, or NAV if it's a mutual fund, and it will go from there. So.
Okay. And then as far as drilling down, so you've discussed this high-level view. What happens if we click on, we want to see what's in, let's say, technology? Yeah,
so you go to technology, and then it's going to break down all of the different sectors or groups inside of technology. So you're starting to drill down. And over here in the market summary now, it still shows it shows how many groups there are. There's 12 groups. There's 8 of them are long, and it breaks it down by sector, and then the groups within the sector, and then the symbols. So there's 686 symbols within this technology grouping, or 42% of the technology is long. And then we show, just like we did on the sectors, this is the breakdown over here in the middle of the individual long positions from a group standpoint. The P&Ls, here we go. Let me go up and toggle over a little bit. This toggle friendly is good for printing, or if you just want to make screenshots. Beauty 2.0, you can right click and copy image, put that into a PowerPoint. You can grab, matter of fact, all these tables, you can just highlight this whole page and and paste it right into a Word doc. It goes seamlessly right into Word. So you can always get that. But here we go. Now we've got an underperform. We've got a combination of some of the things we didn't see earlier. So the current duration is 233 of 131 on this. We can look at the trade profile button that I popped up earlier, so we can see exactly what that is. So it's exceeded just by 24 days right now. You see the projected maximums 207 days. It has now exceeded that, and you can see here we're exceeded by 24 days. It's also exceeded the over here. These stats will show you on the trade profile page. Will show you exactly whether it's exceeded the holding. So the average profit is 20.94. We're currently pushing 37%, and the biggest has been 41.945. So we're getting close to challenging and setting a new history on this particular symbol for returns. And you can see here the average loss is 8%, average gain is 20. So you got well over almost 2.5 to 1 ratio there. And I think we'll save that conversation for maybe talking about ER ratios and those kind of things. But yeah, so the breakdown, you can drill down and go back to sectors here. So now I can go in and let's just we'll grab computer hardware. And now I can see that there's 67 symbols. This will break it down to the market summary. There's 67 symbols in here, 27 long, 40 are neutral, 40% overall. And then here's every symbol that's in that index and showing the P&Ls. And the same if I toggle over so you can see this. The same thing happens. Accumulate, underperform, and hold on an individual symbol is also there. So one of the things that we talk about a lot is the 30-30 rule and the 50-50 rule. I believe we talked about that probably about in the last 4 or 5 Process Warrior shows. And so this is showing, this is the index itself that's here now that we've broken it down. So now we are into the computer hardware index. So you can see this was this thing's been all over the board, and now it's climbing up, and it's been long for 207 market days. So, but we can go down to the next level then if we go over here, and we can grab one of the. Well, we grab Apple. Why not, right? So we'll grab Apple, and so what we did is we drilled down all the way from this. Starting at the group, the sector level, choosing a sector, going to a group, and then getting down to an individual stock within the group. So we've broken this down, and the stock continues to do well. It's odd seeing that price. I'm still adjusting to seeing a $92 price.
Right.
A nice 23% gain. This stock has been a monster for everybody that has it, which is a lot of you. It's one of our widest held symbols in the system. Everybody's watching Apple, and rightfully so. And this, I think I figured out last time we're going to be 102 on this symbol to make an all-time high. I think it's right at 100. It was right at 700 when we were there, since it was what a 7-to-1 split.
7-to-1 split, yeah.
So anyway, but that's how you drill down and toggle out of here. So you always click on the research button to kind of recenter you and start from the scratch again. But that drill down, there's a lot of information here. There's a lot of things that go on. One of the things you can do as well, which I guess we're just going to go through all these features, right, Mitch? That's the plan.
Go for it. It's fine if you jump ahead of me, but I do have that on the list. I'm glad you're doing it now.
Okay. Yeah, just kind of a flow of consciousness here.
Yep. Keep going.
But adding to watch list, a W button, all of these symbols, what I did when going back to the original design of 2.0 is I wanted to be able to, I was impatient. I wanted to go to any item and find out certain stats. So let's say I didn't want to go look at research, but I wanted to just pop up a chart. I want to see how this chart works. That's kind of what I was going for here, is just to be able to get to that chart without having to go to research and go back and forth and lose my place where I was. And of course the Q is for current quote, which it will bring up if it's live. This one is an internal symbol, so there isn't anything. The T is for trade profile. And then if I do want to go to research, so I don't actually have to click on research, click on the symbol. I can just click on this thing right here, and it'll take me to the research. Hopefully, maybe I'm.
It's thinking.
Yeah, there it is. It is thinking. But anyway, you can do that and go back. But we'll just so your migration is pretty simple. And the breakdown, like we just showed, is ongoing. So I think we should probably head back to our PowerPoint and just see how many toes I stepped on.
No, that's fine. Yeah. So you already touched upon the sectors and groups side of it. One of the things that I did want to cover, when you're in that research section, go ahead and jump back over to 2.0. So when you click on research, you'll notice there's this box right here. So it says weekly searches versus daily searches. So right now we're looking at everything in the context of the weekly trade systems.
Yeah.
Now if we flipped it over to daily, that would switch it to look at daily.
Just real quick, I want to so everybody can see this. I'll bring up a whiteboard real quick, and where he's talking about is this area right here. This is on weekly right now, and then if you click on this daily button, it will actually switch everything to daily mode, and you can look through daily symbols. You can go through the same tree that we're going through on weekly just now on daily. So that's pretty simple to do.
And then the other thing, by default, this is pulling up the weekly market overview, as you'll notice right here at the top of this. Now, if we wanted to, we can click on groups. And what that would do is that would load up all the individual groups on this page. So if we scroll down here, you can see that there's all the groups. So we shifted the initial entry point from a sector level to now a groups level. So what Bob initially did was taking this drill down approach by starting from the sectors, then going down to groups. But what you can also do is you could just toggle right to the groups, and you can see all the groups all in one spot. And you can see the key stats on these all from this high level view of it.
Yeah, one of the things I didn't mention on sectors and any of these, if I scroll all the way to the bottom, it's going to show me new buy positions. It's going to show me new exits for this week as well. And that's something, if you just want to see what's going on, you scroll at the bottom, you can see computer peripherals, restaurants, and semiconductors were new buys for this week. And you can see that literally, since this is Tuesday, it's 1 day of whatever they are over here in the entry date, and then you can see current duration. It's one of 243 and so forth, and it gives you the max held, and then you also see the type over here as accumulate on the far right there. Go ahead, Mitch.
What we'll do is we'll go ahead and jump back up to the top. One of the other things that I've thought is pretty handy over here on the research side of things, you'll also notice that there is this little link that says My Portfolios. So what this will do, by clicking on that, it'll actually load up your list of portfolios here on the left-hand side. But what's neat about it is, let's say we grab that kitchen sink portfolio that we had created a couple of weeks ago. By clicking on this, it's actually going to load up all the symbols that have been active within that portfolio. So to give you the complete list, not just the current active, but anything that's ever been part of the portfolio, so that you'll have essentially a quick dashboard to click on each of these names. If you want to see what the current status is in one spot, this is a pretty handy way of just having a quick overview to see within a portfolio what's currently open, what has had trades, and this will show not just what's currently active, but anything that's ever been on the list. Just to give you a quick point of reference, so you could quickly click on one of these securities and then go into the underlying research on a given security.
Yeah, that's a good point. Yeah, just while you're talking, I just realized there's another feature that almost nobody uses, and I would be surprised, maybe even Mitch hasn't used it, but it's under portfolio. So if I went through and grabbed, let me just find, let's go over here and just grab, I can go over here and do this RT button, and we'll grab the kitchen sink since we've been picking on this. this RT button will actually show me a snapshot of actual intraday output of all of these symbols, what they're doing, what their last trade is. Most of these are mutual funds, so the last trade is yesterday's close. But if you had stocks or anything here, any of your stock portfolios, you can actually bring up a screen and see exactly where their last trade is. Plus, minus, all that stuff. For the session. So that's another place there. It's not really in research, but it does give you that another view of your portfolio from a real time. So you want to see how your stocks are doing, you can look at your portfolio. It's not going to tell you that. That's the only place you can actually find that information. And it's used to be 10-minute delay. I believe everything's just snapshot, so it's pretty close to right on.
Yep. Let's go ahead and click on all stats, and if you could, Bob, I'd like you to just talk a little bit about that.
Yeah.
I know we've pulled it up a couple times, both in Process Warriors and in Market Thunder, but I thought this would be a good opportunity to really dig into this.
Yeah, no, that is. Yeah, it's kind of a high level review of actually what's going on within the database itself. It shows you the mapping, and we're T-minus 2 weeks roughly to some of the mapping changing a little bit as we do the update, the mid-year update. But the sector overview, it shows you that 48% here. This is a little bit different view of what comes out in the research. This is I think a bigger picture. It encompasses some different elements here. But it shows you by sector what the percent invested by sector is. And I think I talked about this the other day in Market Thunder, but energy and technology ends up usually being one of the biggest invested sectors, primarily because they have the most stocks in there as well. Those are two of the heavyweights in as far as the group sector goes in this country, I guess, more so than anything else. We already looked at this sector breakdown, and then these are the things that are in our weekly stats. Some of this information is here, but this shows you what the current entries and exits. So it shows that for daily, that was for today, there are 81 new entries, 285 exits. It actually shows a negative ratio. This ratio is about how many new buys versus the sells. So you can see it's a slightly negative ratio, 0.64. And then on 3-2, interesting enough, it's almost 421 versus 417, so that's a neutral ratio. And then on a weekly basis, we saw 203 on 1-2 versus 105. It was a positive. And then on 3-2, we saw 512 versus 86. It was a 595. I believe anything over 2 is a positive on that. So this
is bullish, you mean?
Bullish, yes. Thank you. And then we go back for the sentiment for the last 2 weeks. It shows you from 5:30 to looking back, and you can see we've been bullish for the last couple of weeks as far as that goes. The optimized weekly shows how it's mapped out. It's almost 50-50. It's 51% 1-2 versus 3-2 is 48.44. Prior to the 2008 crisis, this was more 60-40 3-2 versus 1-2. 1-2 addresses a little higher volatility, and what we've seen because of the choppiness and some of the general volatility in the market over the last several years, we've seen more of a shift towards 1-2 being more responsive to some of the volatility than 3-2. And so it's about 50-50 now. So that was an interesting thing to watch from my perspective, since I have that. Daily, we're looking at 1-2 is 39 versus 60, 3-2. This is sort of how the weekly used to look. And the interesting thing here is what that tells you is that the volatility level on these shorter term models is better addressed by 3-2 for the most part. And when it's and it's still optimized where we were showing you earlier, where you can go and set this optimization right to, whether it's daily or weekly, you can set your view. you can see all these stats even in a further breakdown. And this was something I added about 3 years ago, maybe it's been 4 now. But we wanted to have a view. Matter of fact, I am going to make this a little bigger and just move it over so it's easier to see here, and try to make it a touch bigger. There we go. So these numbers here: average days long, standard deviation, average duration, duration fulfilled. I wanted to have a way to look at the database overall and get a feel for what percentage it was running at. So we did an optimized daily, we did a daily 1, 2, and 3, 2 by the model, and we did the same thing for weekly, optimized weekly, weekly 1, 2, 3, 2, and you can see optimized weekly, the average long is 196 days. There's roughly 220 some odd days in a year. So this is just about an average 1 year holding. And if you go to 3-2, it's almost exactly a 1 year on average. It's 215. 1-2 is a little more going to have more trades than 3-2 just because of the way it's set up. I know we did a 1-2, 3-2 comparison several weeks ago, and but there is a volatility difference. So average current duration is 58 days. The standard deviation over the 196 is 83, and then we're looking at percent filled as basically 30%, 0.29. Average profit that it makes on optimized is 36%. So out of all the symbols on the optimized daily, which is the 180 or 18,300, the average returns is 36%. Standard deviation is 79, so it's pretty good, big standard D, but there's a lot of different types of elements in there. Current profit is only 7%. Profit fulfilled is about 20% of that, and the average loss is 8%. So if you look at the average ratios of everything in this database on optimized weekly, average we make 36, we lose 8. So we've got a good solid 4-to-1 ratio on what we win and what we lose. Now, I guess you could pick all the wrong symbols and pick the symbols that we never make any money in. It's GIGO. We talk about ER ratios and selection process and things of that sort. You're going to really hopefully eliminate some of those mistakes by going through that. So, yeah, there's a ton of information in here and how to interpret it. So, I look at this as that we're fairly early in the cycle of the symbols that we own right now on an optimized weekly. One of the things that happened, if you recall, just through commentary and things that I've talked about, is we got down to about 45% long on the database. Now we're back at 58, so we've added about 13%. So that new blood that's come into this cycle has brought these numbers way down. And by the way, they never get 100% duration fulfilled. They get around 70 to 80 percentile range, and then that's pretty frothy at that point. Same thing with the average profits and all that. So at 20%, there's still quite a bit to go. And from a duration standpoint, average, we're about we'll call it a little better than about a quarter of the way through the normal cycle right now. So this gives me a pretty good feel of where we are in the big scheme of things from a holding period. And then as we get longer in the tooth and the possibilities of the market changing direction, failures, the database starting to go back into more of a protect phase, all those things that would happen. Right now, that isn't the profile of what's out there right now. So,
one other thing, if you could zoom out just a little bit, I just wanted to show people that they could also click on the orders, and actually you can see from a high level view.
Oh, yeah. Okay.
Every single order in there, and that's one of the things that I look at every single week to create those charts, is just simply clicking on, like the weekly 1.2 here. It'll show you all the orders that are mapped to 1.2 weekly across the database. Now that doesn't necessarily mean that it's going to be the optimized trade system for that given order, but it will show you the orders across the board. So this is part of the information that I compile on a weekly basis when I create those investment exposure charts. I grabbed the entire list of the 1.2 and the 3.2 to build those charts, and then behind the scenes, I go and check every single one of those trades to see if it's the optimized one to compile those charts. And we also use that as an opportunity to verify that and validate the data to see, is there any distributions that we need to take a look at. So this was obviously very heavily used for us internally back in December when we had all those cells comes through because of distributions that were misreported by the fund companies.
Yeah, I don't know if this thing's working or if it's
Yeah,
tired.
go ahead and scroll up. I think it timed out on us. It does have a tendency of doing that when we load large amounts of data.
Yeah.
So let's, anyways, that's available for you. I guess we don't really need to dig into that at this point. One of the things I wanted to do, let's actually dig into a ticker here. And I guess for the sake of ease, we'll work in the space of Apple. Since this is the most commonly used security anyway, might as well show you all the information that's on Apple. So one of the things that you'll notice when I click on research, I guess I should do that from a high-level view again. You can actually manually type in the ticker symbol here. So I just typed in Apple, and you also have the ability to search for the name. So if you don't know the specific ticker, you could check this off, and you could look for the name itself. But most times when you're actually going to this place, you know what the ticker is. But that is available to you. But we'll go ahead and click on search. And something that people sometimes miss when they go and do the search on something like Apple, you'll see it's the only result in the system that has the AAPL within the ticker. And people immediately start looking at this data over here. But you'll notice that by looking at this right here at the top, we're still looking at the results overview. We haven't actually loaded up Apple into this chart. So whenever you do a search, you actually have to click on the ticker itself down here under search results. And then we can actually start seeing what the stats are for this particular ticker. And now you see it's replaced the VPM universe now with AAPL. And now we have this information that we saw just a little bit ago when we were drilling down through all the data.
Yeah, you want to make sure when you look at there that it shows the symbol and the right name and all that as well.
Yep. You'll also notice on the right-hand side, you can see how it fits within the tree. So here is the symbol, Apple. It's part of the computer hardware group, which is part of the technology sector. And this is something that we also update, I believe, twice a year. So this is something that we'll be refreshing in the coming weeks as well. There's not usually a whole lot of changes, but obviously some companies come and go and some tickers change. But this is an opportunity we'll be taking to update that. Bob, do you want to talk about any of this stuff on this page, like the current position, trend phase, and support resistance levels?
Yeah, actually, we should cover that. Let me take over here. Let's toggle down and look at that. The support, and sometimes you'll see. Let's see. Let's just start at the top. Current position. This is a snapshot of the actual price on Apple is 92.30 at the moment, and it's showing you that it's up 10 cents on a day, but it's showing the actual P&L from the position where we started this at. And then down below that, the trend phase. This is where do I start at?
I'd like you to start on.
Yeah, the trend phase was meant to help give you some transparency. Unfortunately, some of you take these statements way too much to heart, to the point where it causes you to override. The only reason why you should ever get out of these trades is when VPM tells you to, but I was hoping to build some transparency. So it says model currently long, though it has not been confirmed. Well, trust me, this has been confirmed. What happens is that it's based upon the PPM. So when we're going through Market Thunder and we're talking about all the PPM levels, the 0.25s and all that, what's happening right now is that PPM2 is below that 0.25, so it's saying it's not a confirmed trend, even though it's part of a larger cycle. I wasn't able to put smart enough logic to figure out that this not only is this thing confirmed, but it was confirmed a way back. There was no way to put a trigger once it happened and be able to call it what it is. So this, as PPM2 actually phases in and out above 0.25, this message changes a little bit, the trend phase. And so you're going to see right now, this is actually a really good example. Resistance is NA. There is no resistance. And the reason for that, because there's no way to determine where the resistance point is. Maybe it doesn't look at previous highs and all that. The one thing, when we get the TradeStation version out there, there is a way to determine some of that resistance using some of the tools that I built into that. But the trading, the support, then this 84, 26, 79, 77, these three PPMs are tied to the 10, 21, and 40 period moving averages. That's what these are, 10 period, 21, and 40. So it's a simple moving average there. If you look over here, the red line where I've got a cursor on right now is $84.62 and rising. And you can see it's up over 2% here on the on this level here. So all three of these are just simple moving averages, and typically when you see resistance, then there's moving averages above that. There's no way from VPM's current logic to be able to determine once it's broken into new ground or it's above these averages, to determine resistance. And what you can do, though, and this is something that a trade profile will tell you, and let's just see what it tells us. If you want to kind of know what the expectations for this trade is you can go in here and you can see the projected profit means 113%. So projecting Apple to 159.05, that'll be an interesting trade. That's what 1,000 or something, right? What is that? 159. 7 times 159 is what, Mitch? You got a calculator there?
Yeah, I'm punching it up right now.
Okay.
I'm trying to manage so I don't accidentally click something off on your machine. So
yeah. So anyway, but but that's what these expectations say. It tells you at least where the profile target is. I think I'm probably faster on my iPhone on my app than Mitch is being on his calculator here right now. But 159 just rough times 7 is going to give us 1,113 as the target price on that. So the result of that's probably somewhat far-fetched, but who knows? That is the typical trade in Apple is 113%. So anyway, so we're getting way down this trail with like 10 minutes to go, and we haven't touched on a ton of stuff. So I guess this will drive some of our shows here since we've walked into this one pretty thick here. Just amazing how much information is on this page. So let's bring Mitch and I back online. So where do you want to go to next here, Mitch? You want to go back to PowerPoint for a minute? Just see what.
No, let's cover a few more things in here, and then we'll call it good.
Okay.
One of the other things you'll notice up here at the top left, you see where it says trade system. So this is where you can see what the optimized trade system is, and in this case, it is the weekly 3.2. But you can actually manually adjust this and set it to any of the other trade systems that we have in here. So you can set it to either of the daily trade systems, or you can manually refresh it to the 1.2 in this case. And you notice that all this data changed, including if we have a current position, that information will get updated, so that you're looking at all within the context of whatever trade system that you've selected.
Right.
So this can be helpful to evaluate a security, especially if it has a low ER ratio. So this would be a good opportunity to talk about, well, what is the ER ratio we keep talking about? You'll notice up here at the top, we have this little color scale, and we have poor, fair, good, and excellent. Now, correct me if I'm wrong, Bob, but if it drops below 100, it's going to go from good to fair. And then really anything within the system, if it's below 100, I've recommended that you start looking for another security in that same space.
Well, hold the phone there, cowboy.
All right. Let's talk about this.
All right, yeah. There are some examples. We'll have to search one out. But yeah, typically if the stock has been in existence for a long time, but I have seen there have been periods of time when Let me come on screen to talk so you're not looking at the talking screen. There have been periods of time like from 1990 all the way into early 2000 where the resource stocks, all the commodity stocks were terrible. They had the worst ERs in the whole planet. But then all of a sudden, guess what happened? China and India started buying everything that looked like a rock or whatever, and all of these stocks went through. So if you were doing a pure ER analysis, it probably wasn't until several trades down before this happened. So if there's a long history and you look at a stock and it's got a bad ER, but you also can see the stock has never done anything, but let's say it's coming up on a screen. This is the point where I would deviate from the ER strategy. I don't have a problem putting lower ER symbols into the system if they have a profile that they just really never really trended. But now, let's say fundamentally they've hit the screen, and maybe there's even a shift in the industry. Let's say I don't have a good example, but let's say something let's use the example of the past where we did see the
American Express. So financials is actually a great example of that.
Yeah, I'd rather go to a resource
Okay.
stock to keep the context of what I'm doing here. But yeah, so if you went to like basic materials, right? You can see this chart doesn't go back enough. I could go and show you this chart, but there was an explosion in this stock in these charts. So no real good example because we'd have to be able to do a time clock and go back to 2002 and steel, all that iron and steel was another index. This is only going to take us back to some of this, but this chart up here on the right where you see it being so high was from the monster rally that came in there. So what is the was it underscore IS? Well, I'm talking, Mitch, why don't you go to a quote, bring up the quote and go to that underscore IS, and let's bring up that particular symbol. So so what happens on ER, yes, it's important to have a good ER. So, but if the symbol is a long-term symbol, and let me just drive here. And let's just graph this thing from point A to B. This is what I was talking about right here. Here's that O2. Look at this monster rally. Let me get myself out of the way here real quick so you can see the whole chart. But this is the rally I'm talking about. Prior to that, look at this going all the way back to 1996. This was a terrible sector to be involved in. I guarantee you, and matter of fact, I know because I talked to a lot of advisors that were with us at the time, these symbols, all of them that were in this group, had terrible ER ratios. They had nothing to offer from an ER standpoint, but there was clearly a shift in the world toward commodities. And if you turned on steel, you turned on the ores, you turned on all of these situations, all of a sudden you were in the sweet spot and you participated. I mean, this index went from 10 to 60. That's what, 600% gain. This is amazing. And when it came off, when the party was over, it was over. And this is typically what happens with all these rallies. Our stock market we see right now one day will look like this. We will see a monster decline once this rally we're in is completed. Where are we at right now? Who knows? Are we midpoint, higher in, the final leg? We're yet to determine that. But the point is that these are the kind of rallies you want to be involved in. And in the early stages of this, it wasn't until maybe 04 or so before these ERs, and there were trades that came on and off on the individual stocks that started to improve that ER. So that would be my only, I guess, option from looking at ERs and being under 100, because there were some of these that were just terrible, and they ended up to be just wonderful stocks, even like things like Newmont Mining and other, just that comes into mind real quick. But that's the rally I'm talking about. So the unfortunate part, when you see that rally, just like we see the crisis, people seem to hang on. Like, that's why people put commodities in their portfolio, because they remember that 600% rally. They forgot the 500% drop, and they're still thinking about the last rally, and they don't want to miss out on the next commodity boom. pretty much that's happened, even though a lot of the folks out there were saying there's a 100-year commodity cycle and whatever. Bottom line is that cycle is broken. You could clearly see it on that chart. So, but yeah, so ER is important. I do like to see it over 100. I know I had advisor been with us a long time. He built a portfolio he called 250 plus, had to have an ER of 250 to make the cut. And that's fine. It's not a problem with that. But there are going to be situations where some of these industries have been flat or bad for a long time. Maybe there is another point to look at some of these, I guess resource stocks at some point, that there'll be another surge. We'll have to see, but it looks to me that game's over, and we're getting, it almost looks like if you brought up a Cisco chart or something that had the 2000 rally and the .com, and then it collapsed, and we're just kind of creepy crawling back. But that's why I wanted you to see that chart, because this chart is reflected on this graph here is the tail end of that. So those are the kind of things that you definitely want to see. See things go from. See if I'm not sure. Yeah. So this is just 11. I just wanted to bring that more in the spotlight. Anyway, yeah. So the ER is important, and that's I just wanted to insert that, because if you're screening, and let's say you looked at an individual stock and it has just been out of play, it's a good quality company. There was, United States Steel was one of them that was a big player in the steel boom, and if you had eliminated it for its previous ER, you wouldn't have been involved. So if you have a good solid screen, or let's say, for instance, you're more detailed advisor, we have those out there that are really looking at industries, looking for rotation, and you see a rotation that you believe strongly in. This is the good part. Even with a bad ER, if there's a trend, VPM will catch it. The ER doesn't mean it can't catch a trend. It just means the past of that stock hasn't had a trend to participate in. And usually when you look at those stocks, you'll do that. Matter of fact, maybe the next show we do, we should focus on good trades, bad trades kind of thing. We'll find some symbols that have bad ERs, and looking at the patterns that emerge out of there versus ones that have good ones, and the ones that have some of these characteristics we're talking about, because this is where one of the things that you can miss out on some really good trades. But VPM will not miss out on the fact that it has a bad ER. Doesn't mean it'll miss out on the next big trend because it has a previous bad. Doesn't mean it trades that symbol bad. It means usually that the symbol itself has not had much to offer. And when you look at it, you can kind of see it's just pretty choppy, not a lot of big trends, and not a lot going on. And typically, when the only time I like I said, I don't have a problem a low ER adding in a symbol, especially if there's some I guess discussion or a clear movement toward a particular sector. This was able early on in 2002 and 3. I remember really pushing with folks. Now, the .coms are over now. Now we got China, we got India, we got some bigger things happening out there. So we have like 2 minutes to go and bring Mitch and I back on the screen. So we got through typically about 3 screens of our PowerPoint. That seems to be about what we get.
It's fine with me. I'd rather have more prepared than not enough.
Yeah, that's very true. So a lot of information here, really just talking about some of the breakdown, the back. There's a lot of stuff here that will be helpful. And I think we probably should stay on this track here for a couple of meetings, because it's going to take us a while to get through this. And if nothing else, you spend a couple hours with this, you're certainly going to understand the system a lot better. Any closing comments there, Mitchell?
No, I think that's good. I think we're going to keep digging into this, because this is what we dig into behind the scenes, and it's a lot more than just simply logging into your account to see if there's orders, especially when it comes to portfolio construction. There's a ton of information there for you.
Yep. So we're down to the last minute here, folks. So as usual, don't forget there will not be a show on Thursday. We'll send out emails, and if you go to the Ustream page, it will actually show you when the next meeting is, considering we remember to update that. We usually do. We try, but we'll make sure that after tomorrow's meeting that we get updated so that we can so you can see when you go there. The next meeting will be on Friday. Okay, so thanks again for watching, and hopefully this was really helpful for you. We'll talk to you soon.